So Meta is trading back at $300, back to where it was since our last Meta video on September 17. That is 12 days ago. And so we thought we would update our Meta video today since we are back at $300. You can see that right here. This is when we made that video when Meta was trading here at the same price when we drew this Fibonacci retracement. And we asked everybody if they thought Meta would bounce from 300 or break below 300. It did go up slightly above 300, but then came back down, and you can see now we're back at 300. So today, September 30, this weekend, we are going to update this video and also show you how we are trading Meta, because we got into a trade on Friday, yesterday, on this day. So we decided to take in a trade now. All right, so if you want to see our video that we made on September 17 when it was on at 300 as well, put a link at the top here if you have info cards turned on, and also at the end of the video. So you can also review that and learn how we analyze unusual options activity to make better decisions on our trades. So without further ado, let's get right to the data from yesterday, Friday, September 29, the last trading day of the month. We can see that the options time in sales tape here, there was 5,000 unusual options for the November 17th 270 strike calls. So very, very unusual here. And also at the last minute, you see this 3:59 p.m. here. We see these October 6, these 1001. These were for the 275 strike puts and the 282.5 strike puts. And then also at about 12 noon, we have these December 15th 285 strike calls and puts. 1,000 of these. So we'll take a look at these three sets of unusual options to try to figure out what this could mean for Meta stock. All right, so let's take a look at the first one, November 17, 270 strike calls. Okay, so that is over here, 48 days away. The 270s are right over here. We can see that the 5,000 volume here on this column, and we have a very large open interest. So these 270 strike calls could be closing trades. Okay, so they are not necessarily buying to open these trades. So if they were buying to open, they were definitely bullish and going long. If they were buying to close, that would also mean that they were moderately bullish, because if you think about it, they would have had sold to open originally, and now they would have to have bought to close, right? So if they had sold originally by selling these calls, they were selling in the money calls. That is a more of a moderately bearish sentiment, right? And so if they buy to close it, that means that they're moderately bullish now. Right, they don't want to have those calls in the money and being sold, because that's if the price goes up, that would not be good for those options that they sold. So they could be buying them to close them because they think the stock would go up. All right, so this first set would be more of a bullish sentiment, these 5,000. All right, so let's take a look at the next one, the October 6s. These are 275 strike puts and 282.5 strike puts. Okay, so October 6th, this is just 6 days away, so just a week. And we can see the 282s here. Opening trades, because we see the open interest less than 1,001. Right, and for the other one, I believe it was 275, right? 275. that one is open interest of 2,192. So these could be closing trades, right? And the 282s, we know these are opening, right? So we know that they were selling these 282s, which is moderately bullish, because if you're selling these puts, that means that you don't necessarily think the price will drop below 282.5 strike price. Otherwise, you'll have to incur a loss from selling those puts. All right, so this is also a moderately bullish trade here. Okay. So for the third one, you can see here, December 15th, 1,000. Let's take a look at that. December 15th, 76 days away. And we see the 285s over here. And we notice here that on the put side, open interest of 924, so that's less than 1,000. So we know these are opening trades, right? Now, are they buying or selling? Let's take a little deeper look at this. Okay, so you can see here that the call side here, price was 35.83. The market was 35.70 to 36. So there was about mid price was about 35.85, right? So slightly, this is slightly below 35.85, right? So the data is not very, very clear, although it may seem like maybe perhaps it was a sell on the call side, but there could be, this could still be a buy, even though it's, because it's so close to the mid price. It does not necessarily mean right away that it is a sell, just because it's slightly closer to the bid price. Okay, so keep that in mind, especially if the deltas are deeper in the money. For this, you could see that this is right in the middle, so it's also not very clear as well. Okay, so we would say that this data is not so clear, and so these two, the 1001 and the 5000, is leaning towards more bullishness. Okay, and so that is why we traded a long trade going bullish, and the way we did that is we did a shorter term for October 20s. For each of our trades, what we did was we sold the 325 strike calls. You can see we sold it, but we sold for each, we sold two, and then we bought one 315 call and 330 call. So what that does is it creates a strategy known as the butterfly trade, right? So this is what it is here. It costs about 151, right? And we see that it is going long, because we could see the Greeks here, positive 7.80. It has a negative 3 theta, right, and a positive 3 vega. Okay, so we are targeting the 325. That's why this is max profit here at expiration. The 325 is right here. This is the price of Meta on the X axis here. And then on the Y axis here, is the profit lines. This here, anything above this 0 here, that 0 is profit. Anything below is a loss. So if this curve is below that 0, then it's a loss. You can see that the profit decreasing negative as we move with the mouse cursor, and as we go up, it increases. Okay, and so it has potential to make at least 200%, because you could see that it starts to go up to $300 for this line here, and we only paid 151, about that much. So 300 would be 200%. All right, so that is how we are trading this. It's a shorter term trade, and it is we don't put a lot of position sizing into this, because this is not one of our member trades where we have more clear and stronger data to predict the price movements. If you are interested in those types of trades where we follow $1 million trades from very wealthy traders, investors who have a lot more information, resources, sometimes even insider information, then make sure to join our membership, where we share these exclusive videos. These are trades where we pick different stocks to diversify our portfolio, and we found that we can have a higher probability of beating the market whenever we follow those types of trades. And so we put on more of our capital, have a larger position size in those types of trades when we share those with our members. So we like to put our capital to work on trades that have stronger data. And so that is something we do, we've been doing, and it has worked to beat the market. And if you are interested in that, make sure to hit the join button on our channel homepage, and please smash that like button and comment below. What do you think on Meta? Do you think it will bounce from 300 or break from 300, since we haven't quite gotten a clear answer since we made our last video when Meta was also trading at 300. Again, we'll put a link to that video at the end here, so you can also watch that to learn more. All right, wish everybody is having a good weekend, and take care, everybody, and stay profitable.